Today with me we have Garrett Sutton from Sutton Law Center. Thanks for joining us today.
Thank you, Jason. Pleasure to be here.
So one of the things I want to talk to you about is asset protection. Why
Right.
is that so important?
Well, we live in a very litigious society. People sue each other all the time. Attorneys have a financial reward for suing. And so knowing that, you need to take steps to protect yourself right at the start. Right as you start your first business, you invest in real estate, you need to take steps to protect yourself.
And how can people protect themselves from lawsuits exactly?
Well, in business, you're going to use a corporation or an LLC. In real estate, you're going to use probably an LLC, a limited liability company, or a limited partnership. These are entities that the governments of each state allow us to use to protect ourselves. They don't teach this in school, but you have to find out that there are ways to protect yourself.
Does just having the corporation or the LLC prevent anyone from getting pierced through the corporate veil?
No, you have to follow up with the corporate formalities. And if you have a duplex that's held in an LLC and a tenant sues over a bad condition at the duplex, they can reach the equity in the duplex. So you have to have insurance,
Right.
and you need to take steps to make sure your entities are properly formed and maintain them. But we need to understand that the tenant can get at what's inside that LLC. Importantly, they can't get what's outside the LLC. So if you have other real estate in other LLCs, they can't get at the other ones. So that's where the
point.
asset protection comes in.
So a corporation that has multiple properties and things like that, or LLC, how can they protect? They're not just protecting one; they're protecting the entire.
Right. You have to protect all of your entities. You have to segregate the assets through separate LLCs. Then typically we use a Wyoming LLC to hold the other title holding LLCs, and Wyoming offers great protection with the charging order. If Jason, you get in a car wreck and someone wants to come after your assets, they want to get at all your real estate assets in New York, but they're all held by a Wyoming LLC. Mm-hmm. They have to fight through the Wyoming LLC to even get at the New York LLCs, and that is really good asset protection. Wyoming, Nevada, Delaware are great states for that.
Now, as an author of Start Your Own Corporation, briefly explain the difference between a corporation and LLC for people.
Well, they're both chartered with the state. They both have annual fees to the state. The corporation was started in England in the 1500s, and so it has more of a history, but you don't have the great asset protection with a corporation that you do with the LLC. The LLC started in Wyoming in the 1970s and eventually spread to all 50 states. So it's a newer entity, but one of the main asset protection features of the LLC in a strong state is the charging order protection, which means there's a lien on distributions. So someone suing you in the car wreck would like to get at the Wyoming LLC. Mm-hmm. In California, for example, they would allow you to pierce through and sell all the assets. In Wyoming, they say, all you're going to get, Mr. Car wreck victim that sued you, Jason, is a lien on distribution. So whatever Jason receives out of the LLC is what the car wreck victim gets. Well, most attorneys don't want to wait around and mess with that. They'd rather go after the next case that has insurance. Mm-hmm. So a combination of insurance, and especially umbrella insurance for your personal activities, home and auto, get an umbrella policy. If you have enough insurance that the attorneys know how to get at, then they're going to leave you alone on the LLCs. So that's how we structure things.
So now I have a corporation. I did it in New York because it was simple,
Right.
easy. Should I get rid of that, go to an LLC in Wyoming? And is that easy to change?
Yeah, it is.
Okay.
So you can have that corporation. You go, geez, I'd rather have the LLC. Mm-hmm. And so we can switch that. We can take the New York corporation or LLC, continue it to Wyoming, and you all of a sudden you have Wyoming law on your side benefiting you. So it's a good strategy to think about the right mix of entities and states.
Now let's talk about least protected forms of doing business.
Sole proprietorship. Mm-hmm. So many people, Jason, get into business, they're just starting out, and their CPA or whoever says, just be a sole proprietor, right? You don't want to spend money on a corporation or an LLC. The thing to realize, though, is with a sole proprietor, there's zero asset protection. If you're a plumber, you go out on a job, and something bad happens at the job, if you're a sole proprietor, not only they get the truck and your equipment, they can get all of your personal assets, the equity in your house, your bank account. So the sole proprietorship has no asset protection. And when you're starting out, you just have to know that. Now, if you're a sole proprietor and you realize, geez, I should have been a corporation or an LLC, it's not too late. You can make that change and protect yourself from that day forward. When you start operating as a corporation or an LLC, you do have the asset protection.
But if someone then wanted to sue you, they can. It's just from that point back they can get.
If they sue you when you were a sole proprietor, they can get your personal assets. So it's important to do it now so that all into the future you're protected.
So you've been talking about Wyoming, and I've heard that as well, and of course everyone knows Delaware.
Right.
What other states are good to have business in?
Well, Nevada's good. It offers great asset protection. Nevada's the only state that offers that charging order protection we talked about to corporations. So if you have to set up a corporation, and sometimes you do, you would consider using Nevada because they have the charging order protection for corporate shares. So we like Nevada, Delaware, and certainly Wyoming. Wyoming, the annual fee is only $50 a year, and they don't list your name on the internet. So you have privacy. If someone goes to the Wyoming website, the Secretary of State's website, to see what Jason owns, your name doesn't appear.
That's very convenient.
Yeah.
And what are the weakest states to have?
California by far is the weakest. Oh, I mean, what's going on in California is incredible. But California, if you get sued in California, the court will say, have at the LLC. We don't care if you've set up the LLC for protection. If the car wreck victim is entitled to money, we're going to let them just go into the LLC and force a sale of all the assets. So we have to do really a lot of extra planning for California.
Would that even, but not the personal assets?
The personal assets would be exposed in that case as well.
Really?
So, yeah. So if someone sues you in a car wreck accident, they can go after whatever assets you have in your individual name, personal assets. They can also get into a California LLC that may own real estate. Now, what we do is we have a Wyoming LLC as a buffer so that they can't get through the Wyoming LLC to the California assets. But just using a California LLC by itself is not very good protection.
What about another state?
Those are the big three. It would be Delaware, Nevada, and Wyoming. Another weak state is New York, certainly. Utah, Colorado in some cases is weak. So we just need to see where you're going to be operating and plan accordingly.
Now, if primarily your business is in that state, would that matter?
Yeah, you have to be qualified to do business in the state where you're collecting revenues. So, for example, you can have a Wyoming LLC qualified to do business in the state of California, right? You can do that. Some people will do that. But, there are too many promoters out there saying that if you set up a Nevada LLC and do business in your home state, you don't have to pay tax in your home state. That is not the case. That is bad advice. You always have to pay your taxes.
Now, so take me through the steps of setting up. I mean, I don't live in Wyoming, but I want to set up there.
Right.
What's the procedure and how simple is it?
Call me, right? We do it over the phone. And so you don't have to live in the state of Wyoming to set up a Wyoming LLC. It's a constitutional right to travel issue. You get to decide what state you want to set up in, and you're doing that because you want the internal governance laws, the laws of Wyoming, to apply to your entity. So we do it over the phone all the time. You want a Wyoming LLC, you call us, and we can get it done within days.
Wow. So I want to talk about your other book, Loopholes of Real Estate.
Right.
Tell us about that.
Well, I wrote that, Loopholes of Real Estate, for real estate investors who may not have received the accounting and the legal information in school. They don't teach this in school, for when you go investing in real estate. It's important to understand how to take title, how to protect your real estate through LLCs, how to understand how depreciation works. That's a huge tax shelter, the depreciation you can get on real estate. So Loopholes of Real Estate is for the beginning investor and maybe the sophisticated investor as well, who may not have picked up all these strategies along the way.
Now, did the two coincide when we're talking about protecting yourself through corporate law, and I'm still interested in why it's so different in so many states, but as well as the protection on real estate. Do they work together at all?
Yeah, the states, as we mentioned, provide these entities, and you get to choose which one works for you, and that's why you'll talk to your attorney to find out which is best for you. That's an area we specialize in. A personal injury attorney is not going to know the difference between Wyoming and Delaware. Now, you asked, Jason, why the states are different. It's kind of interesting. During the American Revolution, people don't remember we were not only fighting the English crown, we were fighting the British East India Company.
True.
And that was like fighting Walmart and Amazon all in one. I mean, that was a huge company, and they had control of the economy. And so when we win the revolution, people are saying, well, what are we going to do about corporations, right? They're not very favored entities at that time.
Right.
And so James Madison wanted to have a national corporate law, and the other members of the convention said, no, we're going to allow each state to have their own corporate law so we can better protect our state against how these corporations operated. And so that's why we have state-by-state corporate law. It developed out of the Revolution. And we like that because we can take advantage of each state's benefits. So Delaware, Nevada, and Wyoming compete against each other to be the best state for incorporation. And that's a good thing for real estate owners and corporation owners.
Now, it always used to be Delaware.
Right.
Why isn't it Delaware anymore? What happened?
Well, Delaware is good for the big Fortune 500 company, but Nevada and Wyoming have made it, have competed against Delaware and done so successfully. Wyoming, it's only $50 a year for the annual filing fees, and there's no state tax there, right? There are only 500,000 people that live there, so there's not a need for great state revenues. Nevada is $350 a year, same as Delaware. They list your name on the internet, which is kind of a downside. But as we mentioned, for corporations, Nevada is the best. So there are subtle differences among the states, but Delaware, people on the East Coast are just used to the Delaware entity. But when you dig into it, Nevada and Wyoming also have their benefits.
Well, and also geographically, it has to be fought in a Wyoming court. I mean, they would
Correct.
have to physically go there.
Correct. We have a strategy where we hold the Wyoming LLC certificates in the state of Wyoming. If they want to get them, they have to hire an attorney in Wyoming to go after them. And at that point, Wyoming law applies. So another roadblock.
Very, very interesting. Now, how is an LLC taxed?
The LLC has great flexibility. It can be taxed as a partnership, as a disregarded entity where everything flows through the LLC onto your personal return. It can also be taxed as an S Corp or a C Corp. So you get to choose how you want your LLC to be taxed. And that's why LLCs are being used in probably 90% of all cases now because of that flexibility.
Is that just Wyoming or
Federal.
everywhere? Really?
Federal.
Interesting.
Yeah.
And what's the difference between an S Corp and a C Corp? Because that one, I know people will start their business and you ask them and they say, I don't know, I just did it online.
And there is a big difference.
Yeah.
The S and C, I wish it stood for something better, but it's just the code sections in the IRS code. The C Corp has a tax at the corporate level, and then when you distribute monies to the shareholders, they get taxed again. So on the same dollar of income, you have double taxation. The S Corp, everything flows through the S Corp. There's no tax at the corporate level. All the tax obligations flow through to the individuals. So there's only one level of taxation.
So when people are doing the online do-it-yourself, it's an S Corp that they're signing up for.
No, when they do it online, they would start with a C Corp. To get the S Corp status, you have to file another form, Form 2553, and get permission from the IRS to be taxed as an S Corp. And so that's why some of these online services, if you don't know what you're doing and you don't know what taxation you want, you may be walking into a situation that is not to your benefit. You really need counsel. You need good advice on which way to be taxed, on which entity to be used, and we provide that service at Corporate Direct.
Now, what are corporate formalities?
Well, those are the requirements that you have to follow for your corporation to provide limited liability. They're not hard to follow, but if you don't follow them, someone can pierce through the corporate veil and get at your personal assets. So what are the corporate formalities? You got to pay the state every year, right? If you don't pay the state, you become revoked. You have no protection then. You have to do annual minutes. So once a year, you have to have a meeting with the members or just yourself. Some people feel weird about that, but you have to have a meeting with yourself. We provide a checklist so you can do that without talking to yourself. So you have to do the formalities of the minutes, the paying the state. It's important when you are using an entity to use the word Inc. if you're a corporation, or LLC if you're a limited liability company. You want the world to be on notice that they're not doing business with just Jason, they're doing business with Jason Inc., and you're the president of it. So that's another formality. And you got to do your tax returns. You know, each entity, corporation or LLC, will have a tax return to file, and you want to make sure you're working with your CPA to be sure that those tax filings are made.
So you mentioned piercing the corporate veil, and that's something that we hear a lot. How often is that done? And give me some examples of how someone could accidentally do that.
Well, the concept of piercing the corporate veil is where you have the entity, the corporation, and it doesn't have any money in it, right? Someone has sued because they're owed money by the corporation, but there's no money in it. And so they want to pierce through that corporation that's empty and go after your personal assets, Jason. So if you have a corporation that is empty, there's a judgment against it, and the person suing says, you know, they didn't follow the corporate formalities. They didn't act like a corporation. They're not entitled to limited liability protection, right? They didn't pay their fees to the state. They didn't do their minutes every year, right? They didn't file their tax returns. So people who have a judgment against the company will try and get at your personal assets, the equity in your house, your bank account. And that's what piercing the corporate veil is. And it's interesting, you ask, how often does it occur? Well, they bring these cases a lot, and in 50% of all cases, the corporate veil is pierced.
Wow.
50%. That means a lot of people aren't following the corporate formalities. They're not doing the minutes every year, right? They're not filing the returns properly. So if you're going to set up a corporation or an LLC, and they'll pierce the veil in an LLC too, if you're going to set up these entities for limited liability protection, you have to take those steps to make sure that the protection continues. And that's what the corporate formalities will do for you. Following those, not hard to do, but if you don't follow them, the consequences are pretty dramatic. You become personally responsible for that claim.
What about like an example where someone signs a contract, makes no mention of a company,
right?
But then the first check they give you is from the company,
right?
Have they just opened themselves up right there?
Well, we had a case in Minden, Nevada, where I'm in Reno. So south of Reno, there was a case where someone signed a lease in his individual name, right? He didn't put that it was a corporation. He didn't put that he was XYZ Inc. He just put XYZ, forgot the Inc. And then he didn't pay his rent, and the landlord was able to go to court and say, look, I thought I was dealing with you as an individual. You didn't put down that it was a corporation. You didn't put down that you were president of the corporation. And the court agreed with him. They said he had taken the lease as a sole proprietor, as an individual. So it's really important to provide that corporate notice that you are operating as a corporation or an LLC.
Now, obviously that could be a simple mistake. You know, we make mistakes all the time. Sometimes people didn't hire an attorney. Can you clean up the past mistakes?
Well, on contracts like that, it's kind of tough. But certainly on other matters, yes, you can clean it up. If you have not been diligent about doing your minutes, you know, we have a cleanup service. We can, don't tell anyone, but we can clean it up for you. You know, there are ways to clean this up. Another thing, Jason, is if the IRS ever comes to your office, comes calling on an audit, having that corporate minute book with up-to-date minutes is really a great step. The IRS really likes to see that you have followed the corporate formalities. And so that is a good benefit for you to have in your business. Have that minute book up to date, have the stock certificates issued. That's another element that the IRS likes to see. and have that in one book ready to show them if they ever come calling.
Now, again, for those watching, especially people that are sole proprietors, if they want to become a corporation or an LLC, what are the steps? Is it hard to do?
No. So what we would do is we would set up, let's say we set up an LLC, and it's taxed as an S corp. We would provide you with the assistance to get all that going. Then you would begin doing business through an LLC bank account. You wouldn't use the old bank account because that's essentially in your personal name. Mm-hmm. You set up a new bank account. You start operating through the new bank account. All of your contracts will now say LLC. So you may have to go back to people and say, I'm operating as an LLC. Let's do the contract in the name of the LLC.
So a lot of businesses are doing business online. And I think this can be confusing, especially when they change the tax law and requiring sales tax now. So we're registered in Wyoming. We live in New York. We have to qualify as businesses in each state. So one, how do we do that? So we're capable in every state. And how do you do the business online?
Well, let's say you have an online business operating through a Wyoming LLC, but you live in New York, mm-hmm. right? You're doing business in the state of New York at that point. You live there. You are supposed to take a salary from the business, pay your payroll taxes and New York taxes from that. So if you have an online business, but you are paying yourself a salary in New York, you have to qualify to do business in the state of New York. Now, you only have one entity. You just have the one Wyoming LLC. You've
mm-hmm.
just obtained permission to do business in the state of New York, all right? And you'll work with your CPA on that. Now, the question of I do business in Colorado and Utah and every other state, in many cases, you wouldn't have to qualify to do business in those states because you don't have a physical presence or an employee in those states. So you can sell into those states without having to register in those states. The sales tax law is new. You're going to work with your CPA on the internet sales tax. But typically, if you have a minimal amount of sales in each state, you're going to be okay.
Now, if your business provides a service, does that matter?
Yeah, in most states, if you are a Wyoming LLC, for example, and you're qualified to do business in New York, and you go into Pennsylvania for more than 30 days a year, you have to qualify to do business in the state of Pennsylvania. Each state is a little different, so you're going to work with your advisor as to the specific rules for each state. But if you have a continued presence in another state and are receiving income in that state, you typically have to be qualified there.
And what's the procedure to do that?
Well, qualification means we take the Wyoming LLC paperwork and we submit it to the New York Secretary of State and say, look, we're a qualified Wyoming LLC. We want permission to do business in the state of New York. And if you follow the rules and pay the money, they always grant it, right? So you're part of their tax system at that point. So it is a requirement. A lot of people may not be aware of this requirement, but it's important to realize that if you're paying yourself a salary in the state of New York, you really need to be qualified to do business in that state.
Are there fees associated with getting qualified per state?
Yeah, well, you'll pay the fees you would have if you'd started a new corporation in New York.
Okay.
So it's the same fees, but the benefit is for $50 a year, you have Wyoming law on your side.
Great.
And Wyoming has no state tax.
Even
so you're
better.
you're not like Nevada. You're not paying an extra state tax for the benefit of Nevada or Wyoming law. There's no tax there.
And how do you keep up with all the changes with corporate law? Because I know, like with the tax law, I've interviewed plenty of people, 80,000 pages. What's the corporate law like?
Well, it's not 80,000 pages, thank God. But I do a lot of reading. I keep up with new cases and what's happening in the industry, and it's a full-time job because it is a dynamic area of the law, mm-hmm. and you have to keep up on it.
Are there any instances that you can think of where the law has changed where it's, for lack of a better word, so ridiculous that it's going to affect all of your clients? Like people have to stop doing what they're doing because this new thing has taken place.
Well, there was a case in Florida several years ago, the Olmstead case, where a single member LLC, meaning just one owner, a single member LLC was denied asset protection, and that was a shock for the entire country and all the asset protection attorneys in the country.
Was that the state or the federal level?
That was state.
Okay.
But it was the federal government who brought the case.
Interesting.
And they were it was the FTC going after this guy who had committed credit card fraud. And he thought he could hide behind an LLC. And the federal government, of course, has all the resources on earth, or at least they think they do. And they were able to bring this case, and the Florida Supreme Court agreed with the federal government that a single member LLC was not entitled to asset protection. And that was a big case. And so our clients in Florida, we had to take steps to use Wyoming LLCs in some cases, bring aboard a second member in some cases to make sure that they were protected under this new Florida law.
So, well, this is really just great information, and we've talked about your 2 books. Where can people get more information?
Well, our main website is corporatedirect.com. So corporatedirect.com, and we have checklists and articles. We have a newsletter that keeps people up to date on what's happening in the area. And then our phone number is 800-600-1760. And so if you want to call for a free 15-minute consultation with one of our paralegals, just call 800-600-1760 and we'll take care of you.
Wow. This is great advice for anyone that really wants to start a corporation or protect their real estate assets. Awesome, awesome job. Thank you so much for being here.
Thank you, Jason.